you very much to the joint press conference on the no premium, no cover policy. My name is Red Gogo. I will be your moderator for this press conference. I would like to start by introductions. On our top table, we have Mrs. Swela, the Director of Insurance and Microinsurance at IPEC. We have Mr. David Nyabaza, the Chairperson of the Insurance Council of Zimbabwe. We have Mrs. Mariette Vengesai, the Vice Chairperson of the Insurance Brokers Association of Zimbabwe. We also have Mr. Brian Chilema from ICZ. For the benefit of our top table, I will request that we just introduce ourselves, the media organizations represented here, and then we will allow the colleagues who are joining online to also introduce themselves, but we will be able to identify them and recognize them. So you just introduce yourself and the organization that you represent.
My name is Tom Mokadiwa from Financial Express.
My name is Claudine Matola, Business Times.
My name is Philemon Mshanga from AB Communications.
So my name is David Fomi from Star FM.
Morning, Nelson Garanza, Business Number Transaction.
My name is Lauman Komo, Secretary.
Bind them to one sample for select all of the oil.
My name is Godfrey Chitambo. I represent the microfinance institutions. I was just told to come here. Somebody said they're looking for us, they couldn't find us, but they found us. So I don't know why I'm here, but I'm just told to go there. Thank you.
Thank you, Mr. Chitambo. Thank you very much. So, like I said, this press conference is focusing on the no premium, no cover policy requirement. So we also have colleagues online. I see Mr. Mchikawabiri from IBAZ. We have Tawanda Msarurwa. We have Tawanda Msarurwa from Sunday Mail. We have Mtanda Zonyoni from AMH, Gibson Maka from Chronicle, Skulegani Moyo from Chronicle. We have Mary Takawarasha and Elliot Soro from IPEC, Tafanza Mranganwa, he's a freelance journalist, and Tatia Naita from AMH. I believe we will be having other colleagues joining. So we'll start, the structure of our press conference is, we are going to start with the, like I said, it's a joint press conference by IPEC, ICZ and IBAZ. So we'll allow Mrs. Swela to read the joint statement, and then we have Mr. Nyabaza come in to add the ICZ voice, and then Mrs. Vengesai to add the IBAZ voice. After that, we will then open up for questions and answers. Thank you very much. I will invite Mrs. Swela to start the presentation of the joint press statement.
Thank you, Mr. Bongo, and good morning, everyone. I will start by saying the Insurance and Pensions Commission of Zimbabwe, IPEC, together with the Insurance Council of Zimbabwe, ICZ, and the Insurance Brokers Association of Zimbabwe, IBAZ, hereby announce the gazetting of Statutory Instrument 81 of 2023, which is the Insurance Amendment Regulations of 2023, number 26. The statutory instrument was introduced to address the unsustainable high premium debtors within the books of short-term insurers, which threatened their liquidity and financial soundness. According to the statutory instrument, short-term insurers and brokers dealing in short-term insurance are prohibited from providing insurance coverage on credit. Insurance cover at the inception or the renewal of a policy shall be activated upon payment of the required premium. For the avoidance of doubt, non-payment of premiums at policy inception or at renewal stage means the policy was never activated or taken up, or the policy has lapsed, respectively. Section 5AA(1) of the Statutory Instrument 81 of 2023 states that, in quotes and quote, the receipt of an insurance premium shall be a condition for a valid contract of insurance, and there shall be no cover in respect of an insurance risk unless the premium is paid in advance. Unquote. Premiums may be paid directly to an insurer if one is directly insured, or may be paid to a broker if insured through a broker. The provisions of Section 5AA(1) exclude policies providing insurance for crops in terms of the Farmers Stock Order Act, Chapter 18(1)(1). Policyholders are therefore advised to pay their premiums in advance in terms of the provisions of Statutory Instrument 81 of 2023 to avoid non-payment of claims in the event of the insured risk occurring. Meanwhile, there are ongoing engagements within financial institutions to avail insurance premium financing to assist policyholders in timeously paying premiums. Thank you.
Thank you, Mrs. Swela. That's the short joint press statement. So like I said, we will now proceed to Mr. Nyabanza to add the ICZ voice, and then we'll go to Mrs. Mengesai for IBAZ. Thank you.
Thank you very much. I acknowledge the presence of Mrs. Swela, the Director for Insurance. I think from an Insurance Council of Zimbabwe perspective, what I just want to inform the public is that the insurance industry was providing insurance cover on credit, and this was resulting in the premium debtors increasing, just to put numbers to it, from 15 billion in June 2022 to 180.4 billion by June 2023. And based on the premium that we were retaining, this constituted over 20% of the premium that was held up in debtors. And to just add some more color, 20% of the total assets of the insurance industry was tied up in debtors. And that has many repercussions, including, among others, liquidity challenges, the inability to pay claims in time. But even from an economic development perspective, we were unable as an industry to meet our prescribed assets requirements, because generally you cannot use debtors to transact. And therefore, the role of the insurance industry in stimulating economic growth was heavily hampered. And then from a client perspective, I think we also welcome this development, because 61%, if you look at the Insurance and Pensions Commission list of complaints that are handled, if you look at the June 2023 numbers, 61% of the issues or the issues that were in contention that were handled by IPEC related to premium payment or claims delays because of premium payment issues. And obviously that puts a very bad name, or it puts the industry in very in a poor light. So we are confident that this will go a long way in addressing some of those issues. And we believe that as an industry, with no premium, no cover coming in place, we should be able to discharge our obligations more quickly. We should be able to contribute more to national development, and we should be able to meet our obligations without the unnecessary hiccups or back and forth when we are trying to establish about premium. Because in essence, as Mrs. Suela has said, once a policy is in force, it presumes that the premium has been received. And I'm happy that the microfinance institutions are represented here, because the clients, we hope that we are not licensed to provide credit. And we hope that the financial institutions will be able to come through and provide premium finance for our clients, so that the insurance business happens very smoothly. Thank you very much.
Thank you very much, Mr. Nyabaza. We'll proceed to Mrs. Vengesai, representing IBAZ.
Thank you very much. I would like to acknowledge the presence of Mrs. Suela. Just to add on to what my colleague representing ICZ has mentioned, the insurance industry was offering cover on credit. This resulted in a huge debtors book. Ideally, insurers should be able to build technical reserves that enable and capacitate them to indemnify clients in the event of losses occurring. So this has resulted in the coming up of no premium, no cover, such that they are enabled to build these technical reserves. I would like to mention, therefore, that insurance will no longer be issued on credit. Premiums must be paid upfront for cover to be issued. Failure to remit premiums will give insurers right and law, because now this is law not to meet claims. We would urge, therefore, our valued customers to comply, so that they are not exposed and inconvenienced in the event of losses occurring. Thank you.
Thank you very much, Mrs. Suela, Mr. Nyabaza, and Mrs. Vengesai. Like we say, this press conference is focusing on the no premium, no cover policy. So we'll now open up for questions, clarifications, if there are any. From colleagues in the media, either those who are here in person or online. You can raise your hand and then give you the floor to speak. I don't see a hand. Is it because it was straightforward, or we are confused? Okay, Nelson.
Yeah, I just want to find out where are these premium data mainly coming from, and what are some of the measures you are going to implement to record this data.
Thank you, Nelson. I think he's asking whether it is at sector level, is it individuals? Any other question? Any other question? Those who are online, you can also, okay, I see Tawanda has his hand up. Tawanda, you can ask. Tawanda, you can unmute your mic and ask. Tawanda, can you hear me? Okay, you can't unmute him from here. Hello? Try to unmute him. Okay, while we're waiting for Tawanda to sort his side, Tatira, you can ask.
Good morning. It's Melody on Tatira's phone.
Yes, Melody, you can proceed.
Yeah, my question is probably directed to all the three of them. We, as the industry, we are working on trying to increase insurance penetration rate, which has always been low over the years. And I'm sure the reason why some policyholders fail to own up to their premiums is because they can't afford insurance. Won't this no premium, no cover result in what can you call, in a further drop in insurance penetration in the country? Thank you.
Thank you, Melody. I will go to the last one. I think it was Philmon.
My question is directed to Mr. IBAZ. I missed the figures on the debt level.
Thank you. I think it meant the premiums and then the premium debtors on the figures. For the premium debtors in terms of assets, that's over 20%, like you said, of short-term industry assets. So we are saying about 20% of the total industry assets is in debt, is in premiums that have not been collected. And then the figures in terms of the movement from June last year, 15 billion.
Yeah, so in absolute terms, 180 billion is at 30 June 2023 from up 15.07 billion in the previous period, that is 30 June 2022. I think Lloyd did mention about 20% of the industry's assets, above 20% being locked up in debtors, but I think that figure changes to 40% of current assets. So you have more debtors than cash in the insurance industry.
Thank you. And let me add also that following the enactment of SI 81 of 2023, indicated figures for Q3 2023 are now 91 billion, showing a drop of about 50% from 180 billion in Q2 2023. Thank you.
Thank you. Maybe we can as well just respond to the questions from Nelson on the areas where this is prevalent, each sector, the individuals, and then we got the one by Melody on whether this policy is not going to affect penetration or insurance uptake, assuming that people who are not paying premiums, they probably don't have the capacity to pay the premiums. And then the last one by Philmon, I think that has been attended to. I'll go to Mr. Suela and then Mrs. Wengesai and Mr. IBAZ will come in.
Thank you. My view is that a good premium penetration rate based on data is misinformation, because those people are not really insured. If we are to tell the truth, they are not insured. If they are to incur a claim and they go to the insurer, they will be told you have not paid the premium and therefore there is no claim. So I think we need to base the penetration rate on correct figures. Thank you.
Thank you. Just to comment that the feedback from other markets that have implemented this SI has been a reduction in premium due to unavailability of cash and disposable income. So definitely we will anticipate a knock on premiums and on the aspect of insurance uptake, especially when we consider the economy and the availability of cash and disposable income. However, I would like to maybe just ride on what Mrs. Suela has said already. Money that you cannot collect, you cannot count on it because it cannot serve you. So it's now striking that balance, because at the end of the day, it then it gives a bad picture of the insurance industry when claims are not met. So it's coming to that place where the insurance industry wants to be capacitated to indemnify clients as per the promise. Thank you.
Thank you. So maybe Mr. IBAZ, you can Okay, Mr. Chirema, representing ICZ as well.
Thank you very much. I would just also like to add that Mrs. Weller made mention that the industry is in discussions with financial institutions to provide premium financing. So this will also come to assist those clients who cannot afford their premiums upfront. Premium finance does come with a bit of a cost, but when you look at the ultimate benefits that the clients also get from paying their premiums, and what will also happen to the industry, the economy at large, I think by and large, people agree that the benefits far away in the reduction that we might get. So we will also see that other avenues that enable clients to pay premium will eventually kick in, and they will become effective as we assess the market.
Thank you very much. Mr. Nyabaza, are you able to respond to the question by Nelson on the way this is prevalent?
Okay, so I thought Brian would take that because he's our chairman of the technical, he can unpack the figures better. But suffice to say that I think it's across the sectors. Obviously, when people know that there is credit, no one would want to pay cash. So it was across the sectors, but we had particular and individuals as well. But I think we had particular challenges, I think, in our manufacturers when we tried to look through the book. But I think in short, it was across the sectors. Then maybe just to add on to the discussion around premium penetration, I think that my colleague has said that the markets that implemented this saw a drop in premium, but that was not the end of the story. I think during the transition, yes, the first 2 years, but then the premium started to pick up as people got used to the no premium, no cover, and also other infrastructure like premium finance came through to make sure that there was funding for the insurance premiums. And maybe just to bring more clarity, this is something that has happened in this market before. We used to have financial institutions, without mentioning names, that were very big in premium finance. Some of them that are there still day to day. So we believe that that is the right way to go. And once we have that, it even helps in terms of the vetting, because we are giving credit. We don't really have the skills to vet credit worthiness, but the banks and the financial institutions can do that. And we believe it is a more sustainable way of making sure that we deliver on our promise to indemnify clients in the event of a loss.
Thank you very much. Maybe, Ms. would you want to add on some of the risks that may be associated with offering insurance on credit?
I think the biggest risk is the failure to get your claim processed at the end. I think policyholders are better protected when they have paid their premium and they are fully covered. And also we're in a position to better assist them with their complaints when they have paid premiums. Thank you.
Thank you very much. There is a question from Tawanda Sarurwa. He says, does this new policy apply to all forms of insurance? Maybe you can clarify the exclusions. We also have a hand. Yeah, Mr. Shitabo.
Okay, anyway, mine was not, it's not a question, but I think the fact that you invited us here, it means that in our small way we can be part of the solution. My observation here is saying that in any event, I believe this country is very highly underinsured. From my point of view, from what I'm hearing, I think it's underinsured. We don't know the reasons why, whether people can't afford or they don't want or they are afraid. I think, yeah, but get this very clear. Maybe the hangover is still there. Maybe it's part of the bigger hangover. It's not only insurance. I think medical is sometimes also an issue. When you get sick and you really want to get sick, you hear that the premiums are not in proper place or whatever. And the West, should you decide to die for whatever reason, you have to tell you, but in areas of 4 months, and then let's do some bandaging here. So it's bandaged eventually. So I think it's part of the problem. Why are people not up to this grade? It is very such an important issue. Because insurance is not the ones when you want to claim, and you are told, no, maybe you can't. The figures you talked about whether it's 20 or 40%, I think in microfinance, would actually say your body temperature is very high. You don't need a GP, you need a physician to know what is the problem. Because in our case, all things being equal, our non-performing loans or portfolio to risk, it's around 5%. 30 days. So if we are sitting on 20 to 40%, unless you have got very plausible reasons and the ways to collect, it means body temperature by a bit of much. Maybe that's why this conference, I think, is to find out. And in our case, because as I said, if you look for me, you couldn't find me. I think we would want a bilateral, either the three of you and the microfinance institutions, so that we are very clear where and how we can help. Because I'm sure we can. IPEC, I know they've been trying to talk to us, but the problem is about the people are busy and they're busy doing the wrong things at times. So, guys, let's do this thing. So, I think within the very shortest period of time, let's see talk. Maybe even any other, I'm sure 16th of November. I've got a big conference in Cairo. We can do it online, and then I think we start looking, because I think the earlier the better. Thank you very much.
Thank you very much, Mr. Chitambo. We also want to recognize Mr. Kusikwenu, who has just joined us. He's the immediate past chairman of ICZ, Insurance Council of Zimbabwe. So we have submissions from Ms. Chitambo. We also have the question from Tawanda on the exceptions, the exclusions or the exceptions for this policy. And the areas that are excluded, you may need to emphasize on that. And then I will invite Ms. Tinabanza and Mrs. Vengesai to respond to the submissions by Ms. Chitambo.
Thank you. I think the question says, does this policy apply to other sectors of insurance? The policy is designed primarily for the short-term insurers because their contracts are short-term in nature. Imagine this, you have taken a policy on credit, we have gone through the policy term, we have not suffered any loss. Who would pay a premium when they have not suffered a loss at the end of the term? So the instrument is designed for short-term insurers, and the instrument itself exempts agriculture insurance for crops and also for the farmers' stock orders. If you've agreed with an insurer on a stock order, then it is well and good, you can proceed on those terms, but not on credit. Thank you.
Reactions to Ms. Chitambo's question?
I think just to comment that when a client takes insurance on credit and they don't have a loss, there is no pressure on them to remit that premium. So those are some of the challenges that we're facing, where insurers would agree to offer cover on credit, but the clients, they do not keep to the word. So that then resulted in a huge status book. So obviously the position that has been taken now of the SI 81 of 2023 is purely to address this challenge, because surely we cannot carry on like that, because the very same policy holders will be expecting that they are put back to the position that they were in before losses happened. So this is a measure to address the challenges that we're facing as a result of non-payment of premiums. Thank you.
I think part of the question was also to do with medical insurance. And I just want to say currently, IPEC is not mandated to regulate health insurance. So to comment on that. Health insurance is currently under the Ministry of Health. Thank you.
Okay, thank you very much. I think I just want to react to the positive part where you said that we must sit down and talk. So we'll definitely get in touch so that we can get funding for our clients. Thank you.
Thank you very much. I don't see any other hand or even online. So that brings us to the end of our press conference. We will be sharing with you the joint statement that was made by Mrs. Swela. We will now invite you to have, for those who are here in person, can have a cup of tea, coffee, and then get to chat. I know others also have side interviews that they want to have possibly with the panel and the other representatives from the industry who are amongst us. This is the opportunity for you to talk to them. For those who are online, we'll eat on your behalf. Thank you very much for joining. We'll be sharing with you the presentations as well. Thank you.
Thank you.